But let's find out where some of your conviction lies and get into pro picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information.
Yeah, I mean, I think this year it's not about picking individual stocks, because if I'm the macro and what's going on, as I said earlier, there's only two things that drive stock prices. There's valuation, which I gave you what the history was. At 2.5% to 3% inflation, the S&P should be trading at 19 times. It's at 24. The other one is earnings. People have earnings going up double digits this year. And as we talked about earlier, the entire U.S. economy had a 41% growth in imports in the first quarter. 41. So for me, this is about you're managing how much money you have in the market. When it rips, you think about selling it down. When it collapses and it looks like there's no hope, then you can buy it for a short-term bounce that should average 10 to 14% on average. But as I said earlier, I think, you've had rallies of 18 to 21%. You had that happen. There were 3 rallies of 18 to 21% during the tech bubble, while you lost 49% of your money. So they can extend even further, which this one looks like it's going to. And I think it's more about managing that. From a bigger picture standpoint, like if you're trying to get involved with things, I think the last 2 years, it's been all about investing in AI infrastructure. I think this year, next year, it's going to be more about, well, we have all this AI data being created, but how do we move it around? How do we get access to it if we're a corporation? And so I think the networking space, Cisco is one of those names that I think should benefit from spending, switching from just purely on AI infrastructure to upgrading the networks, moving that data around. And so that's one of the ones that I would look at and say, you know what, I think hopefully over the next couple of years that outperforms even in a tougher tape.
So definitely parking it in cash for now. Like, I'm curious, how much of your portfolio is cash?
There's a reason that I came into this year having cash as my top pick, invested in money market funds. So I'll just leave it at that, because it moves around quite a bit depending on if I'm in a period like when stocks have been absolutely decimated and I think something will change. Like in early April, we'll have a lot less cash. If we're in a period like now when the market's up 17%, the S&P from its closing lows on April 8th, then I'm going to have a lot more cash. And so that's how we tend to move it. That's how I tend to move it around.
And you mentioned Cisco as well as sort of a second area to kind of hide out. It looks like it wants to retest some of those highs at around north of $60, let's call it. When you say it could get caught up in some sort of infrastructure rally, what kind of upside do you see from here?
I don't think about it that way, because, if for some reason people then go, oh my God, this is an AI play, who knows where the multiple goes to, right? Because right now it trades at a high teens multiple. As we said earlier, the S&P trades at 24 times or so. You don't know. I try to pick fundamentally good companies where I think the estimates have a chance of going higher. It's clearly not a name that people look at and go, oh my God, this is an AI play, right? It's nowhere near that conversation. I mean, the stock's not even back to where it was in 2000. So the good news is that it's sort of forgotten. People don't care. But the last few quarters have been strong. They've got, they're going to report again this week. We'll see how that goes. I think it should be good. And it's a process for companies to re-rate. And I think Cisco is one of those companies that could re-rate and get at least a market multiple in the future if people go, yeah, you know what, networking, all of this data, that's important. And we've underinvested for a couple of years because we've been spending it all on AI. And now we've got more money to invest on upgrading our infrastructure to move this data around. So I don't ever put price targets or, where I think the valuations can go on companies, I just try to say, well, if I think the estimates are going up, which I think they could in Cisco's case, and unlike most of the tech companies, I think the multiple is actually low and could expand, then I think it's a good stock to be involved with. And, don't forget, I can short things to try to hedge risks. And so for me, Cisco is one of the most intriguing tech stocks out there, which is why it was a top pick coming into this year, along with cash as my lead.
If you had to pick a Mag 7 stock that you, maybe let's call it, hate the least, is there one that stands out?
Well, I mean, if you want to look at it fundamentally, you can say, well, look at Microsoft. They had numbers go down after they reported the June quarter of last year. They had numbers go down after they reported the September quarter of last year. They had numbers go down after they reported the December quarter of last year. This quarter, they actually had numbers go up. And they had acceleration in Azure, which went from 31% year over year growth to 33%. Google Cloud and AWS both had growth decelerate by a couple of percentage points each in their businesses. So this is clearly one where on the margin, things are sounding better after sounding bad for the last 9 months. And their spending, which I really like, which had skyrocketed, they're cutting back on. Their spending was down sequentially in their March quarter. They've talked about their spending now going to track revenue growth, which is growing in the mid-teens. So if you look at it, that's part of the reason why this was the worst performing Magnificent Seven stock last year. And it's the best performing Magnificent stock this year, is I think that change in how much money they're spending because they haven't seen the return they thought. And the business is turning underneath that. And they gave good guidance when they talked about June after having a good March quarter. So it's the one that I look at and I go, from a longer term perspective, it's the most interesting. Nvidia, if you want to try to trade it could be interesting because I think, you have this big $5.5 billion write down. It's going to make it look like margins go up. Everybody's buying every chip they can get their hands on because they're worried about export controls, obviously. And so things may look okay for a short period of time. And then I think back half of the year, you're going to have another set of problems. But, that's more of a trading scenario. So unless you're willing to think about it in that manner, I wouldn't touch it. But because you've got revenues modeled in at up 10% sequentially for the next 4 quarters, and I don't think there's any chance they get close to that in the back half of this year. But that the valuation looks interesting, and I think people want to believe that AI is great. But again, what was interesting today in looking at the stock was it was actually underperforming relative to its peers, which I found very interesting. So I don't know if investors are actually starting to think forward and go, Microsoft cutting back is not good. And yeah, demand's been pulled forward or what. But, that's one of those that's probably more in the tradable category, but I'm not sure I would own it the day they report their results. So okay. We'll see.
We'll call that a bonus pick, like a little bit more of a short-term idea. Dan, I really enjoyed our conversation. I'm definitely feeling less Pollyanna than I was at the beginning of the conversation, but I think people need a dose of that too. So thanks so much for joining me.